Picture this, it's 2008, and Greg Gliner is perched in a sprawling hedge fund office overlooking Manhattan's skyline, watching markets unravel in real time. Central banks scramble to stabilize economies, currencies swing wildly, and commodity prices dive like roller coasters, right where global macro traders maneuver through chaos, hunting opportunity amid turmoil. But how do you train your instincts to read these global tremors? Let's break down how global macro trading really works and why it matters to your portfolio. To master global macro, you first need to know its battlegrounds: equities, currencies, fixed income, and commodities. Each behaves like a wild animal with its own rules but tied together through global economics. Gliner recounts a pivotal moment when emerging markets crashed in 2013, triggered by U.S. Federal Reserve taper talk. Equities from Brazil to South Africa plummeted almost overnight. It wasn't just about stock prices, but the economic pulse of entire nations faltering under sudden capital withdrawal. Imagine currencies as chess players locked in endless battles over interest rates. The pawns are inflation, and central banks are the grandmasters. The book explains how traders watch these moves closely. Just one hint of a rate hike or cut can send currency values swooping or soaring across the global board. Commodities like oil, gold, and wheat don't dance to financial markets alone. They move on harvests, geopolitical tensions, and weather. Gliner shows how a drought in the Midwest or a conflict in the Middle East can ripple across commodity prices, creating distinct profit windows for traders who read the signs. Trading global macro isn't just about crunching numbers. Your mind is the battlefield. Bias sneaks in, risks lurk unseen, and management isn't optional. This section pulls back the curtain on how the pros control the chaos inside themselves before the markets. Gliner shares how confirmation bias blinds traders during volatile times. One hedge fund manager doubled down on a currency bet just to prove a theory right, ignoring signs that the macro environment had shifted. The pain taught a brutal lesson: your brain can be your worst enemy in trading. He likens risk management to piloting a plane through a storm. No pilot ignores warning lights. Stop-loss orders, hedging strategies, and position sizing are instruments that keep traders alive when unexpected turbulence hits, turning potential disasters into mere bumps. Portfolio construction is the art of balance, blending asset classes to survive stormy markets. Like a tightrope walker, you need enough diversity to avoid a catastrophic fall, but not so much you lose focus and profits. Greg's methodology helps traders build resilient portfolios that flex without snapping. The secret sauce in global macro trading lies in strategies, how you spot and seize opportunities from worldwide economic shifts. Greg Gliner breaks these down into discretionary gut calls and systematic data-driven moves. Greg recalls a 2011 discretionary trade on Japanese yen when a small hedge fund manager sensed the Bank of Japan was about to shock markets. Relying on gut and subtle data cues rather than models, she positioned just before the yen's sudden surge, turning insight into profits in a heartbeat. Think of systematic trading like a relentless robot detective scanning mountains of data for clues humans might miss. Algorithms pick up repeating macro patterns, from yield curve shifts to inflation spikes, executing trades with speed and precision beyond human limits, smoothing emotional volatility from decisions. One unexpected player in your global macro toolkit: central banks. Gliner emphasizes their outsized influence. When institutions like the Fed or ECB tweak rates or signal policy, entire asset classes pivot fast. Understanding their moves and psychology is like having the market's whisper network at your fingertips. Remember that hedge fund office overlooking Manhattan? The chaos then isn't gone, it's just the market's constant rhythm. Global macro trading teaches you to listen to central banks, to capital flows, even to your own biases. Try this next time you hear a major economic release. Pause and ask yourself how it might ripple through equities, currencies, bonds, and commodities. Your edge begins there. Subscribe for more book summaries like this one.